Okay, great. Welcome everyone back to Smart Investing, which is our weekly, we talk everything, shares, stocks, and crypto as well, anything exciting, tips. And joining us is Zak Mir and Clem Chambers. So we are waiting for Clem, Zak is on. So Zaki, tell me what is cool, what is exciting, what investor after the CPI, instead of getting depressed, what they should cheer them up with.
Well, I think the market is holding steady. I think it's managing to withstand all that can be thrown in it, with 30-year record high inflation and a new offensive in Ukraine and just everything that you can possibly have. I suppose it is the case, and it has been said, that in difficult times, actually, the stock market can be an oasis of serenity, and I think we've got a bit of that here now. And the other thing to think about is actually what companies are going to do well in an inflationary environment. I think I read that Tesco's trebled its profits, which obviously shows that it's able to not only pass on prices, but do a bit of profiteering as well, which is nothing wrong with that in a capitalistic society. So, try and pick the stocks that are going to benefit from inflation. It should be mining stocks, commodity stocks that profit from that. And I think a lot of the small cap mining companies are starting to nudge higher. The news of the day I saw was, I think somebody said to me on Twitter that Glencore has taken a 10% stake in Horizonte Minerals, which is HZM, which is a small cap mining company. I think it's nickel, but correct me if I'm wrong. So that was the news of the day. But if that kind of news with the big miners buying into the small miners starts getting some momentum, it could be a very interesting time for the small cap mining area, which I think I've been saying for quite some time. And obviously, oil and gas still is not exactly going to be. It's not exactly going to be down with oil around $100 a barrel. So that's the easy stuff on the stock market. The other thing that I want to announce is that I managed to raise the £2 million for.
Congratulations!
Yes.
That's for your IPO.
That's right, for Lift Global Ventures.
That's all.
Yes, exactly. So that's, for people who don't know, it's financial media and technology, which means basically any of the service providers, online service providers in the sort of stock market sphere. So that'd be PR companies and brokers and trading platforms and research houses and video and podcast makers and all those sorts of things. Might even try and take over this particular show as well for a couple of quid. No, that's
that would be something interesting.
Obviously, this is just too expensive to buy. I mean, it's like the Netflix of financial podcasts. So it'll be. I think we'll need much more than 2 million. But if the market cap goes up enough, you never know.
Let's see. We can maybe discuss a sponsorship. But
yes, but I mean, I think the point was that it was a rather difficult time. I agreed to do the IPO. I agreed to do the IPO in sort of in spring last year when there was a bubble in small caps, and obviously since then we've had Omicron and Ukraine, and we've had inflation, and we've had almost everything you can throw at it. But we've done it. The appetite was there, and it was mostly from institutions and sort of so high net worth people who've gone into it. Okay. And it's, in fact, there's still another 10 days if you want to get into it with the 1/3 warrant. So we're listing at 3p, but there's a 1/3 warrant at 6p for anybody.
Sorry, 1-to-1 warrants, you said?
No, 1 to 3. So for every 3 shares you buy, you'll get 1 free share at 6p. So that's if there's an upside there, then you'll get that. So that's
okay. And there is that you can exercise it anytime for the next. Whatever it is,
a couple of years or whatever it is. So if you want more details, just search Lift Global Ventures and you'll see the website and all the details. And if you don't want to do that, then just keep listening. Keep watching the show.
Oh, fantastic. Exactly, because we are going to break this down. Clem is joining just in a second. So, Zak, just going back, you are a well-known market guru, small cap analyst on the London market. You have been in the industry for many years and you have always worked in the financial space. So what is the strategy with the IPO? Just give us some kind of taste of what you are thinking to do, because there is a lot of corporate activity. We are seeing ADVFN, these stuff are happening. Clem is not going to comment, obviously, but we will know very soon by the end of the month. So, and a lot is going on in the US with kind of like those fintech companies. So just a couple of minutes of
So basically, one example is in the old days, you would have a PR company with 5 or 10 staff in an office in the city. You'd pay them a retainer of 2,000, 3,000, 5,000 a month, or whatever you paid them. Out of that, obviously, there's the salaries and everything else. They'd help you with the RNSs, the stock market announcements. They'd try and get you into the newspaper, and that's basically what they would do. But now everything is on Twitter, it's on Telegram, it's all online. And basically, it's the companies that provide those services, a bit like Cassiopeia services, those sorts of companies.
You have to change your.
Yes, exactly. So and everything's about podcasts and articles and tweeting and everything else. So it's just the communication, the digital communication, and the businesses that provide that digital communication. The businesses which will. If Lyft Global Ventures has a Twitter feed, you'll pay somebody X amount a month to man that Twitter feed. You'll pay them to maybe edit your podcast. There's all these sorts of things. And so it's really the service providers, the digital service providers that people use. At the same time, there are lots of trading platforms now. There are apps as well where you can trade. And all that it's all the picks and shovels of the financial area, whether it's in crypto or shares or FX or whatever it is. So that's it. And as I said, I mean, if with this podcast, it would be something that if it has 100 million or 100,000 listeners, there would be you would charge a fee for people to advertise, etc., etc. So it's that kind of thing. So it's everything to do with the stock market and communications on that.
Fantastic. So that's great. I see there are quite a lot of contenders on the market, like, Vox of the situation. So, let's not comment more on that. So Clem, just to get you up to speed, it's great to have you on. And Zak raised the 2 million for his IPO. So we were just going through, boom. But there is still space. So anybody watching that is interested in getting in the space, with a well-known, founder, director on. So, that's the person you have to talk to. So let's talk something like, I don't want to start in a bare conversation talking about inflation, because that's where we are going to end up to. Maybe let's look at the bright side. Let's start to kind of show off some opportunities for people.
The bright side is you're all going to have a lot more money. The bad news is it won't buy you much.
Yeah, I know. But let's maybe look like how we investors are going to edge, how they can, be creative. Zak just mentioned, gold and silver rising, small caps, crypto, obviously.
Well, I've got to say, gold and silver, it's so yesterday, although I'm up to my ears in it. I've got to say, I've got.
What's today then? What's so today?
I tell you what, you won't believe me. Gold is golden, but sugar is sweeter.
Oh, really?
Okay, so explain that.
Look, I mean, let me give you a quick run over it. I mean, and I've been, I do some stuff with some other traders where we chat. And about 4 or 5 months ago, I said to them, look, it's commodities, right? The inflation equals commodity booms, spikes, verticals like we all love, up like a rocket, down like a rock. But the market rotates through them. It goes, oh, today's rocket ship is nickel. Bang, up it goes like a rocket. Bang, down it comes like a rock. Yeah, but it still doubles or triples and maybe quadruples from the starting point to the top, and then it halves. That's what used to happen in the 70s, and this is where we are today. And then in 3 or 4 weeks' time, bang, it's something else. It's cocoa. Bad example because he hasn't done it. Or bang, it's wheat. or bang, it's corn, or bang, it's pork bellies, which, by the way, if any of you ever wondered what a pork belly was, it's bacon. Yeah. So, and they've all been doing it. They're all up heavily. However, as I said to these guys, I said, well, of course, you know, sugar's going to do it at some point. And I was chatting away with one of them, and he said, well, look at this sugar chart. I looked at the sugar chart, and I went, oh, I think I better buy 100 tons of that. And I did, because sugar is breaking out. Now, you might say, yeah, well, no, charts and all that stuff, rhubarb. The point is, in inflation, commodity prices go up, not because the cost of sugar goes up, it's because the value of money goes down. Yeah, and commodities are actually really, they're not money, but they are real value. Yeah. You cannot make sugar cheaper than it's made. You cannot buy sugar cheaper than the commodity price. So when the value of money goes down, commodities go up, and everyone gets overexcited and they rocket. And, you know, Bob's your uncle, you get the situation they were seeing time and time again. But sugar hasn't done it yet, but it's just starting now. And if you look at the chart, you go, oh my
okay,
God.
Clem, about the chart, help me out. Is there a ticker for sugar?
AMEX Cane, CANE. Now that's how I'm getting exposure to sugar.
AMEX,
which is AMEX, which is the American market, and cane is an ETF, which is basically you give them money and they put it into sugar futures, and that's all they do. And the price of cane tracks the price of sugar. How are we doing?
I mean, we are not doing well, because it's AMEX, like the card.
AMEX : just go to ADVFN.
Okay,
if you do a share screen, I'll talk you through.
Yeah, exactly, because I think I'm a bit, you know.
Here we go. So, yeah, scroll up to quote, say, up to quote. Yeah. And then just put AMEX, or just, yeah, colon. No, that's a semicolon. No, that's a comma. It's the two dots.
Sorry.
Yeah. CANE.
CN?
CANE. Cane. E for egg.
Yeah.
There we are.
Oh, see.
Now, if you scroll down, that's the 1 year chart. Now, if you can click on that too. Yeah, that's good. Go to you are on 5 years. Scroll down so we can see it all. It's not all on the screen yet. Now, remember, if you click down on where it says 2018 and then you drag it, you'll be able to get more. Keep dragging, a bit more. Yeah, that'll do.
Oh.
Yeah, exactly. Now that's all you've got on this ETF. So now a chartist would say, look, it's just broken out. It's gone through that, and it's going to go another $5 easy. Now, sugar is energy, because they take sugar and they turn it into ethanol, which they put in petrol. So it's not as if sugar shouldn't be tracking the oil price, because it should, it might, but it doesn't have to track the oil price, because to make sugar, you need to have oil in your tractor. You need to have pesticides on your fields. You need to have fertilizer on your field, and you need to grow it with all the cost base that you're suffering, which is called inflation. So the price of sugar and all commodities, basically, you say the value stays the same, but the nominal value goes up because the value of money goes down. and sugar simply has not yet exploded. And to me, I'm going to go off and buy some more tons of sugar after this discussion, because that's what always happens when I get excited.
Why hasn't gone up yet?
Well, it's a very good question, and I have a load of very poor answers. And the way that I look at it is this: the markets these days are just incredibly unreactive. They're just so slow. It boggles my mind. How many months have I been talking about inflation on this?
Well, many, and we always talk about gold and silver, perhaps. So we never.
And now now everyone's going, oh, there's inflation. Oh, better buy some gold. Yeah. It's like, you know, as I believe they say in Australia, the market needs to grow a brain. And I think the reason for this sluggishness is that the markets are so overwhelmed by central bank liquidity and central bank operations and all that that it's and COVID. I still got a funny feeling that everybody's at home on Zoom rather than in the markets operating.
Yeah, but everybody is on Zoom, exactly.
Well, so they're not at the office at 7 in the morning, sat around a table saying, what asset should we allocate some capital to today? I think that basically a lot of the financial activity that we've seen in the world has had its batteries taken out because nobody's in the office and nobody's scrabbling over each other. There's no pit in Chicago where they're bidding this stuff up. I mean, there might be, but you know what I'm saying. The actual blood pressure of the market has dropped dramatically. That GLD, by the way, AMEX GLD is the gold tracker.
AMEX.
Colon, got GLD. No, not gold. GLD. G for an L for lemon. No, not gold. GLD. There you are.
Gold Trust.
Yeah, that's the gold tracker. So this tracks the price of gold.
Okay.
So if you put overlay, where it says overlay.
Yeah.
Yeah, there. Yeah. Type XAU.
Yeah, I save it.
No, not silver. I mean, not sugar. Well, you can see how it's underperformed gold. If you go where it says, no, stop. Go back. Right. So now we want to put on there, X. Letter X. AUD. A for apple. U for unicorn. D for dog. And then USD at the end of there. No, not colon. Actually, take away the D. Take away the D. X. Okay, let's start again. X AU USD.
Here it is.
There you are. So that's the actual gold price. You see, it's exactly the same as the tracker. So actually, you've done a good thing there, putting the sugar on. You see the sugar. I mean, sugar is as good as gold. I mean, all right, you can't make a necklace out of sugar, but well, you probably could.
Can we put silver as well, please?
What do you want to do?
I want to put silver too.
Okay, there, type X AG USD. There's silver for you. Now click draw again. There, yeah, there you go.
That's so interesting because they were kind of trading very similar.
Well, you see silver. Don't do that. Don't do that. No. Silver is the fastest horse, you see, because silver is more volatile than gold. So you can see that at some point, silver is tracking gold, and then silver just goes bang. That's kind of what silver does. And you can see sugar, which might as well be gold. I mean, sugar is energy, right? Sugar is life. Sugar is food.
Yeah, when you have sugar, exactly. Sugar is food as well. I mean,
yeah. So that. So I'm loving that. I've bought myself a lot of well, not really a lot, enough of cane, which is these sugar ETF.
So you are basically thinking that it could go to 150.
Yeah, that's exactly right. That would be my runaway price level.
Yeah. And what is the runaway for gold and silver?
Well, a lot higher. I mean, got gold. Well, I mean, it depends. It always does depend. But I like to think of it as $2,500 an ounce.
Yeah, and silver.
I mean, perhaps even $4,000 an ounce. But gold is very slow. Gold doesn't go fast. It's like if you want to gamble on inflation, you'd be gambling on all sorts of crazy stuff. With gold is just going to grind away because there's a big disconnection between the value of gold and the markets. So if me and you want to go and buy some gold coins, we can do that, but there's no connection between gold coins and the price of gold because there's no direct link between the futures price and all that gold in the basement of banks, etc. So it takes a lot of a pull for the retail market to pull the price of gold.
You know what is kind of like funny? You go on TikTok and Instagram, and nowadays you see advert of how people can actually take all the little gold coin, gold things they have, they don't use, maybe old earrings and stuff, and they kind of like burn them and they make a gold coin, a gold bar. So it's becoming like trendy now on TikTok and Instagram to actually, how do you do this at home without, burning?
Making smelting gold is not too easy. You can buy smelters for precious metals for about $200-300, and you just plug them in on your desktop and burn your house down. But they are, and there's all sorts of dangers with smelting metals. I mean, they have a bad habit of exploding if they get near water, for example. So you've got your melting stuff away and you put something in it and it's got some water in it, it explodes and sprays you with molten metal. So it's not, or it's cold and you put it in and it's quite a dangerous activity, smelting metals. It's not to be taken upon lightly. And, if anybody who wants to do that better know what they're doing and it's not without hazard. But why go to all the trouble? You can just buy gold coins from places like Kitco or whatever, and you've got your gold. Even better, you can buy silver coins if you're that way inclined. But why wouldn't you buy the ETF?
But also, Clem, is also a way, I mean, I'm glad that you mentioned sugar, because we've been talking a lot about gold and silver. The portfolio now, it can become just like a monomatic mining portfolio where, adding some silver, some sugar, which we kind of show the opportunity, the upside. It could be interesting move for investors as well. So I'm really glad.
Well, I've really, it's like one of those things when you've been thinking about it and you put all your plans in place and then you forget you've got them and then you trip over them again and Bob's your uncle, you're absolutely in the right place for that trade. So I was fortunate that my friend remembered sugar as it was, because I'd done all the homework and was ready for the trade and wasn't following sugar close enough, which of course is why you have all these tools, which is to keep track of all the opportunities and keep track of all the things that are going wrong and all the things that could go right, so that you can manage your investments. But I mean, it's an exciting one because inflation's not going to go away.
No, exactly. Okay, let's add another interesting variable here, Bitcoin, because I want to ask.
Okay, BTC USD, and it's going to destroy your chart, but never mind. There you go.
No,
that, you see, this is how you take a small amount of money and make a fortune by buying in 2017.
That's actually interesting to look, even though it just kill our chart. So my question.
Well, why don't you put ETH USD as the last symbol?
Sorry.
One down. Not there. No.
Yeah. Here. Okay.
Yeah. ETH USD.
Oh, I'm loving ADVFN.
Come on, ETH USD. There you go.
Oh no, Clem, this is even worse. I mean, seriously, I'm just gonna screenshot that.
Now, if you before you screenshot it, if you look at Ethereum and USD, you can see in 2017 it goes up like a rocket and it comes down like a rock. It's almost back down in 2019 to where you would have been if you just held gold. So the question is it going to do the same thing again? Is it going to replay that mountain structure?
That's what I was going to ask you, because you always kind of like brought up this 4-year cycle, boom, bubble, bust with the Bitcoin. Now, some fundamental has changed. So usually you see there is, there is kind of like the boom, and then there is the bear, and then 2 years before the halving of Bitcoin, there is kind of like a rally. So I just wanted to ask you, are we still in this 4-year cycle, and is going to pan out the same way, where we have a bear market and then we have, we have a rally that is coming off, we have a bear market, and then the 2 years, because now in 2022 we are just half of, still basically middle way between the us have, Bitcoin and the next one in 2024. So question is, are we going to see now a rally or not?
Well, first of all, I would step way back.
Okay.
I would say that don't put your money anywhere where you absolutely don't know what's going to happen. Yeah. There's 2,000 equities. There's infinite quantities of other places you can put your money. Don't chase profits. Don't chase losses. Don't chase anything. When you see something, you go, oh, look at that. Wow, I need some of that. Like I just said about sugar. I look at that and I go, got to have that. I look at the Bitcoin and Ethereum and I go, nah, well, yeah. It looks like 2018 all over again. And it certainly did in the middle of last year. But something came along and turned it all around. Well, I suspect it was probably what we're seeing in Ukraine and Russia now and Afghanistan. That they were all linked geopolitical events that gave Bitcoin and all the rest of the crypto a big boost. Now, are they going to keep them boosted? I don't know. Am I right about that? I don't know. All I know is that I don't know, and therefore I don't want to play.
Yeah,
it's that simple, really. It's like if you think you know, you don't, and if you know, you probably do. So when you look at something, you go, wow, look at that. Wow, I know which way that's going. Then you get involved. But you look at it and you go, well, is it going up, down, or sideways? I can tell you, looking at that Bitcoin chart, it could go up, it could go down, it could go sideways. The only thing it's not going to do, that chart is not going to go from right to left. So why would I play that game? I have no idea.
Yeah.
I mean, my view is, which is, 50-50, because you could go up or down or sideways, is that we're at that. If you take Ethereum off for a minute, if you just empty that little box at the top where it says, if you take that off and then just hit return. Yeah, there you go. I see that there's definitely a trend there, and it's at the bottom of that trend. And if it were to break down through 4,000, where that's the equivalent of gold's value, if it was to break down through that level that you see of that blue congestion there, it's going to go down a long, long way. Yeah, it's going to go down to probably 20,000. But it doesn't mean it will, because Mr. Putin does something stupid or even more stupid and nasty than it's done, and up it'll go like a rocket.
So basically, there is so much on the play with geopolitical stuff that we can't really, follow the.
I think that's the situation. Is that it's almost unknowable, because all you're doing is you're betting against or with Putin or Biden or our man in the Ukraine.
And I think that's a very important point, because Bitcoin is not hedged against inflation. What we do know is that we have got inflation.
Yeah, but inflation is going to grind away at 6, 7, 8, 9% for the next 3 years, which is no big hairy deal. Actually, it's going to make a mess of a lot of people's finances. But there's not a load of Russian tanks driving through, blowing up your house. Yeah, so within, in context, the governments of the West are going to rebalance using inflation as a tool, which they have always done. Because when you dig a huge deficit hole in your economy, there's no way to fill it. You can't fill it by doing austerity, because your whole economy collapses. So the only way you do it is to rebase your currency and default on your debt by undermining the value of your money. And to do that, they did it at the end of the Second World War, they did it at the end of the First World War, they did it at the end of the American Civil War, they did it at the end of the French Revolution, etc., etc. The Romans did it. They all did it. Here we are, fans. I've got the Romans in there somewhere. So it's what governments always do. Nobody makes inflation, but governments. Governments make inflation. That's who does that. And of course they go, it wasn't me, I didn't do it. No, it's over there, it's him, it's that thing there. No. It's not me printing all that money. Well, it is, isn't it? Oh, but that's not doing it. Yes, it is, isn't it? That's like on the first chapter of the book of economics you get when you're 15. Oh, no, it's him, it's them, it's not us. Of course it's them. Of course it's them. And they have to do it. You just have to look at your deficit that of the government has the GDP. Economies that have 110 debt to GDP in normal circumstances don't grow very fast. And if you want to grow, you've got to have it down to 80% of GDP.
Yeah.
And they will inflate GDP and your money down in value until that balance is got back to, because everybody got 20, 30% poorer because of COVID. And if you look at your bank account and it's the same, well, how can that be when the whole world stopped for 2 years? The point is, you are poorer and it's going to come out in the numbers. Now, whether it comes out because there's inflation and you don't keep up with it, or whether it comes out because something that you you get fired because there's an economic collapse or whatever, has to come out. And the way that it's chosen to come out is through inflation, which is the least worst of all the other ways of doing it. Anyway, it's there, it's coming, it's here, it'll carry on going. We've probably got another 50 to 100% inflation in the next 3 or 4 years. And, if you don't remember the 70s, you probably weren't born then. But if you remember the 70s, you remember what happened to your Mars bar. And that's going to happen again. And then once they've got that balance back in, it'll stop, because they'll suddenly pull the handle and inflation will stop. And they'll go, oh, look at that, it's gone. Oh, wonder where it went.
So Clem, a question is, is probably the wrong word. Is the small cap space still a good place to invest, considering the fundamentals of commodity that you mentioned? Then we have got some ETF, but tell me a bit about the small cap. Are you still a fan of it, or do you think maybe?
I've long been away from small caps, because I can't invest in small caps without moving the price, which might sound a little bit, can't invest, they're too small.
Yeah, you might just have to put on.
But a lot of them are too small. And it's not that they're too small per se, it's that the market is not functional down at that end. So this is great stock. It's a fantastic stock. It's going to appreciate 10% a year. Okay. It's called the Clem PLC. Okay. You go to buy it, and in the market, there's a 15% spread. So it costs you 15% more than you can sell it for. Well, you have to hold that stock for 1.5 years to get your money back. And then when you come to sell more than 10 grand's worth, the market goes, oh, no, we're going to stitch you up now. You want to sell some of that? You can't. Oh, no, we don't want it anymore. We'll give you a stupid price. Well, I can't be doing with that. Yeah. I can't be playing with that. But fortunately, the market is so dysfunctional in the UK that even fantastic shares can end up at stupid prices, and they're quite liquid. So I tend to just buy really cheap companies that are solid and let time take its course, because there's just so much insanity and stupidity even in the big caps in the UK. I mean, the insanity and stupidity in America, for example, is different shape. Why would you buy a company worth 8,000 trillion billion zillion dollars when its market cap is $300 for every human being on earth? I mean, an investor should look for the insanity and either sell it if it's too high or buy it if it's too low. And me, I just buy stuff that's too cheap, and sugar looks too cheap, and gold looks too cheap, and everything's moving so incredibly slowly. Everything's on autopilot, I believe. That's my crazy theory, and it's pretty crazy. So much is on autopilot. So much has been operated by algos that were programmed in 2018 that things have got detached from where the situation of things really are. I mean, there's a hotel company that taught me an interesting lesson in investing. It's a hotel company, and its share price kept going up and up and up and up and up. It had hotels. Nobody was in hotels. How the hell can a hotel company keep going up and up and up over COVID when no one's staying in hotels? I still don't understand it, but it didn't do me any good that I was short of it. But fortunately, I don't short very much. So I had a few shorts in, and they caused me nothing but pain. Fortunately, stuff that was way too cheap caused me nothing but happiness. So I could just write that down to experience. But explain to me how a company whose business has been closed for 2 years can, over those 2 years, double in price. Don't get it, don't understand. There's cleverer men than me that will understand that. So you stick to what you know and what you're good at. And if you're good at buying cheap stuff and selling it when it gets expensive, that is the way to go.
Okay.
And so, that's what I would advise. Now, if you think we're going to be in a bear market, it's hard to make money in a bear market. If you think you're going to be in a bull market, then it's easy to make money. And if you think commodities is going to be in a bull, buy commodities. If you think gold's going to be in a bull, do gold things. If you think that tech company is going to be in a bear market, you don't want to be anywhere near that. So, ultimately, you should, if you absolutely know it's good, do it. And if you've got any doubts, keep your cash in your back pocket.
Exactly. Clem, thank you so much. I think that was great for today. We have got a new entry, which is sugar. And, always stress.
In commodities, ETFs are your friend.
Okay. Because you don't want to buy, obviously, you can't buy tons of sugar.
You don't want a lorry load of sugar showing up in your back garden, do you?
Yeah, exactly. Okay, so for commodities, ETF are your friends. Check out sugar and always invest in what you know. And if you think you know, then you don't know. And if you know, then you maybe know, right?
Yeah, it's gold. Gold miner taught me that. I was up to me nipples in a river with a gold pan. And you look at it and you go, what's that? What's that? And he goes, if you think it's gold, it isn't. If you know it's gold, it is. And he was absolutely right. The moment you get a bit of gold, you go, that is gold. And when you saw this sparkly stuff, you think, oh, is that gold? Maybe that's gold. No. When you get a bit of gold, you go, boom, there it is. And that's how you should invest. When you've got gold, you want to invest. When you think it's gold, steer clear.
Okay, Clem, thank you so much, and happy Christmas and our Christmas. Oh,
happy Christmas. Thank you.
I can't believe I said that. Happy Easter. I keep saying
you got Easter egg on your face.
Okay, happy Easter, and I will see you next week.